subscribe to our YouTube channel, Joy Learning TV.
It has always been a pleasure to welcome you, my lovely student, to the SHSR on Joy Learning channel. I come your way again, and I am Madam Judith, your costing teacher. I will take you through today material accounting as we have begun some weeks back, and today we are looking at material pricing. Get seated behind your screens, get your calculators, get your notepads and your pens, and then let's get rolling. Our objective for today, by the end of the lesson, you should be able to define material pricing, state the reasons for material pricing, define stock valuation, and state the methods of material pricing or stock valuation. You should also be able to prepare a store's ledger using the methods of material pricing. Let's get started. All right. So what is material pricing? We have looked at the stock levels in our previous lesson and the quantity we are supposed to keep in our stores so that we can issue them out to production. Today our focus is going to be on how much we are supposed to issue the materials out to production, as in how much we are supposed to price them. So when we talk about material pricing, we can say it's defined as the process of deciding on the cost to place on materials issued out to production. Is defined as the process of deciding on the cost to place on materials issued out to production, or the process of placing or pricing issues of materials, the process of pricing issues of materials. The focus is on the price we are giving to the issues of materials to production. Let's look at the reasons of material pricing. Reasons of material pricing. The first one is to value the closing stock of materials in the store. To value the closing stock of materials in the store. Also, it is used to prepare the cost sheets. And then it is also used in the preparation of cost estimates, and then it also helps management to make comparison between actual costs with the standard cost of materials. It helps management to make comparison between actual costs with the standard cost of materials. What then is stock valuation? We have looked at the material pricing, and now what is stock valuation? It is the process of calculating the closing stock at the end of a particular period. It is the process of calculating the value of the closing stock at the end of a particular period. When the closing stock has been ascertained, it becomes the opening stock of the succeeding month. So if we get the closing stock for January, when we get to February, the closing stock of January becomes the opening stock for February. Let's look at some of the methods used in material pricing. We have the first in, first out method. But before we continue, we have 9 different methods used in material pricing. But for your level, we are going to consider the first 6. So for the SHS level, we are only going to use the first 6 methods. But when you get to the tertiary, we have 9 different methods of calculating or using material pricing. So we have the first in, first out, commonly known as Fifo, and we have the last in, last out, Lifo, weighted average method, simple average method, standard method, and then the replacement method. But for our lesson for today, we are going to take the first 2 and look at how best we can issue out materials to production using the first in, first out method, and then the last in, last out method. So the first in, first out method, Fifo. This is a method of stock valuation that uses the price of the first batch of materials received into the stores for all the issues until the units from this batch are issued, after which the price of the next batch becomes the issue price. It's a method of stock valuation that uses the price of the first batch of materials received into the stores for all the issues until the units from the batch are issued, after which the price of the next batch becomes the issue price. Thus, the prices that are received first are the first to leave the store before the subsequent ones. So a typical example is even in our homes. When we buy foodstuffs, we use what we have bought already in our store before the subsequent ones that we have purchased. When you go to a shop nearby you to buy and you want to buy a milk, they will definitely issue the first in the stores out to you before the subsequent one they brought into the stores. So that is the first in, the first out method. We are going to use the price of the goods we purchased first into the stores to issue out or to sell the materials we are issuing out to production. Some advantages of the Fifo method. It is easy to understand and explain to management. Very easy, as you know that the first materials that came into the stores are supposed to be issued out, or the price is supposed to use to issue out materials to production. It is also simple to operate. It shows that the prices of the older stock is being used first, and this makes the system realistic, because when I buy the materials at 4 cedi, I issue them at the same 4 cedi instead of using the current prices to issue the materials out. So it shows the prices of the older stock is being used first, and this makes the Fifo system realistic. Closing stock value is almost equal to the market price. And the last advantage is a good representation of sound storekeeping practice, whereby older items are issued out first. Definitely, if you have materials already in your store and you go to the market and purchase new set of materials, you wouldn't want to issue what you just brought into your stores out. Definitely, you have to issue the oldest stock of material in your stores out before the new ones you have purchased into your stores. So it's a good storekeeping practices because it will prevent the oldest materials from getting spoiled. Some disadvantages of the Fifo method. When purchases are frequent, the use of the method becomes more complicated. When purchases are frequent, the use of the method becomes more complicated. I'm sure you understand when we get to the calculation. Most comparison between job is difficult as the material price varies from batch to batch. Comparison between jobs is difficult as the material price varies from batch to batch. We don't have one price for all the batch of materials bought into the stores. Each purchases come with a different rate or price, making comparison difficult for each job. In times of rising prices, the closing stock is at a higher price. When the prices are high, the closing stock ends up being high. Let's illustrate how we can use the Fifo method to issue materials out to production. So, illustration 1. I hope you are ready. Let's all walk through this and see how best we can issue our materials from the stores to the production. The information below relates to a material stocked by a manufacturing business. The information below relates to a material stocked by a manufacturing business. On the 1st of September, there was an opening stock of 800 units at 40 cedis. On the 5th of September, a purchase was made with 200 units at a rate of 42. on the 7th of September, there was an issue of 300 units. We don't know the price, and this is our main focus. We want to know how much we can issue the materials to production. So we know the quantity we are supposed to issue or sell out, but we don't know the price at which we are supposed to issue them out to production. So we are going to use the Fifo method to determine the issue price. On the 12th September, there was a purchase of 400 units at 44 cedis. And then 15th September, there was also an issue of 400 units, of which we don't know the issue price. And then on the 25th of September, there was also an issue of 350 units. Let's try and follow through, look on your screens and get the questions down, then we can all solve it together. We are required to complete the store's ledger account using the following methods, as in the first in, first out method, and then the last in, last out method. But once we've started talking about the first in, first out method, we will start illustrating it using the first in, first out method. So we have the question on your screens again. Let's go through it quickly, and then we can start solving it together. Okay, so let's see how we can issue out our materials using the Fifo method. Okay, so let's see how best we can illustrate using the Fifo method. We have the dates, the purchases, issues, and then balance. All right. Under it, we have the quantity, the rate, and amount. I'm using QTY to represent quantity. Then we have the rate and then amount. We have quantity, rate, and then amount. Okay, so this is how the ledger or the store sheet should look like. We have the dates column, the purchases or receipt column, the issues or sales column, and then the balance in the stores. So we have 1st September. This is our questions back on your screens. If you have not copied it, just try and go through it. So on the 1st of September, there was an opening stock of 800 units, which was at a rate of 40 cedis. So let's indicate it on our worksheet. September 1st. Opening stock was already in the store, so we don't record it under the purchases. If you do that, you end up increasing the purchase figure. So we take it straight to the balance, 800 units at the quantity side, and the rate was 40. So we multiply 80 by 800 by 40, giving us 32,000. And that will end 1st September. So on the 1st of September, there was 800 units already in our stores. Let's look at the next date, which is 5th September. There was a purchase of 200 at 42 cedis. So on the 2nd, we record it under the purchases. There was a purchase of 200 units, and the rate was 42, as seen on your screens. So we have 42 cedis So 200 by 42 will give us 8,400. We need to transfer what we have purchased or bought into our stores, which will increase the balance. So we have two different ways of presenting it at the balance side. If you are now learning it, you are advised to do it step by step so that you know which item came in first when you are issuing out. So we bring the 800 down, which was already in the stores, and the value is 32,000. Our new purchase is 200, and the value is 8,400. So we sum it up. We have 1,000. We have 32,000 plus 8,400, giving us 40,400. So we close day 2. If you are okay and you understand it very well, what you are advised to do is just to bring the total, that is the 1,000 and then the 44,000. That's what we want to see at the balance. But because we are now doing it, you have to sum the two up, bring all the balances at the balance side so that you know which item came in first and which item came in last. The next date on our list is on the 7th. On the 7th, there was an issue of 300 units. So we need to know how much we are going to price it or the rate to give to it before we can issue it out to production. So on the 7th, 300 units was issued out. Now our question, Fifo is saying that we have to issue what came into the stores first before what came in after will be used to issue the materials out. So our opening balance was 800 and we are supposed to issue 300. We can issue all the 300 direct. So we have 300 on the 7th, 300 units. So the price will be the price of the materials that are already in the stores, which is the 40 cedis here. So 300 multiplied by 40. We have 12,000. So when we are done like this, we just have to subtract the 300 from the balance of 800. Now we know that what came into the stores first is left with 500. And then we still have the 200 we just purchased. Now our balance in quantity is 700 units. Now the balance at the amount side, we subtract the 12,000 from the 32,000, leaving us with what, 20,000. And then the balance for the 200 is also 8,400. We sum it up to give us 28,400. Okay. So on the 7th, we had issued out 300 units at a rate of 40. That is the price that the first materials in the stores came with, which is the 40 cedis. We continue on the next sheet. So we still have our dates. The purchases. The issue. And then the balance. We have the quantity, the rate, and the balance. Amount. Under the issue, we still have the quantity, the rate, and the amount. Under the purchase too, we have the quantity, rate, and the amount. All right. So we ended on the 7th. Let's continue. On the 12th, there was a purchase of 400 units at 44 cedis. So we indicate that on the 12th, (400 units at 44. So we multiply 400 by 44, giving us 17,600. So we transfer it to the balance side. We already have some stocks at the balance side. From 1st September, we have a balance of 500, and the value is 20,000. Then on the 7th, we have 200, and the value is 8,600. Sorry, 400. So now we have to add the new purchase we have made to what we already purchased, which is the 400, and the value is 17,600. So we sum it all up to know the total at the balance side. So 500 plus 200 plus 400 will give us 1,100. And then at the balance side, we have 17,600 plus 8,400 plus the 20,000, giving us 46,000. So we end the 12th of September. And then the next date is on the 15th of September. There was an issue of 400 units. We still don't know the rate or the price, so we have to use the Fifo method to look at the issue price. So 400 units on the 15th. On the 15th, they issue 400 units. This is what came into the stores first. We have issued 300 of it, and we are still left with 500. Now we have to issue out 400 units, meaning we can issue it direct from the 500. We still have what came into the stores, parts remaining. So we issue out the 400 direct from the first item of material that was already in our stores. So we issue out 400 units. And the 500 units came at a rate of 40. So 400 by 40, giving us 16,000. We are still left with 100 here. 400 from this 500. We are still left with 100 from the opening stock. 100 by 40, giving us 4,000. That is, you can subtract the 16,000 here from the 20,000 here direct, and you get a balance of 4,000. So we are still not done issuing out the first stock of materials that were in the stores before we even made some purchases. We still have our 200 that we purchased, and the value was 8,400. And then the 400 we just purchased with a value of 17,600. So we sum it up to know the total number of units in our stores. So we have 700 here, and then 4,000 plus 8,400 plus 17,600, giving us 30,000. And that ends 15th of September. So at the end of the day of 15th September, we have 700 units in our stores at the value or amount of 30,000. Let's look at the last transaction that took place On 25th September, there was an issue of 350 units, and we need to look for the issue price for that 350 units. So the date is 25th September, and the quantity that was issued out is 350. So we have 25th September. There was an issue of 350, but per the first items that came into our stores, we are only left with 100 units to issue out. So we first have to issue the 100. As the Fifo mentioned, the first batch of materials, we issue them out using their prices until that batch of materials are out of the stores before we can touch the subsequent ones. So we are still left with 100 units in our stores to issue out. We cannot issue all the 350 direct. We have to issue the first 100 at the rate it came with. That is, the 100 was at a rate of 40. Then we can now come to the 200 and issue the materials out at the rate we purchase the 200 units of materials into the store. So we first have to issue the 100, and it was at a rate of 40, giving us 4,000. The total units we are supposed to issue out is 350. So we've only issued out 100, meaning we are left with what? 250 units to issue out. So the 200 units, we can issue the next batch of materials we purchase. That is the 200 units here. That was next after the 800 units of which we have issued out, and now is out of the stores completely. So we have to issue these 200 out. So the 200, what rates was the 200? We purchased the 200 units at a rate of 42. So our issue price is going to be this 42 cedis. So we have 200 at 42 cedis. And the rate or the amount is 8,400. We have now issued out 300 units, but the total units we are supposed to issue out is 350. So we have to go to the next item of materials we purchase and issue the 50 from there. So the next item of material was the 400 units. So we are going to issue the 50 from this 400 to get the total quantity of 350. So let's continue on the next page. Okay. So we have our dates. And we have our purchase column, the issue, and then the balance column. All right. So we have the dates, our purchase, issue, and then the balance. You know, there is quantity, rate, and amount. Quantity, rate, and amount. And under the purchase too, we have the quantity, rate, and amount. So we are looking at the last batch of materials we are supposed to issue out. We've already issued 100 and then the 200. We are left with just 50 to be able to issue out all the 350 units. We have the 100, we have the 200, and the total quantity to be issued out is the 350 units, of which we have to issue from the last batch of materials that were purchased into the stores, which is the 400, and it came at a rate of 44 cedis. So the last batch of 50 units we are supposed to issue out will be priced at a rate of 44. So we have issue of 50, 50 at a rate of 44. Giving us 2,200. So we sum it up, we have 350 units, and then 2,200 plus 4,000 plus 8,400. So the total amount is 14,600. So that is the total units we have to issue on 25th. Now our balance, we just take the 50 from the 400 here. The 50 we just issued, we issued it out from the 400. So we are left with 350 in our stores as the closing stock in units. And then our value is the 14,600 here from the total of 30,000 here. So 30,000 less 14,600, giving us 15,000. 15,400. So this become our closing stock. So we can state that our closing stock is our closing stock is 350 units, and then valued at 15,400 cedis. So this is how we can illustrate the Fifo method with the question given us. We wanted to find out how much we can issue out materials to the stores using the first in, first out method. And that is basically based on the materials that came into our stores first. You make sure you issue those materials out first before you can even touch the next batch of materials using the prices of those materials that were brought into your stores. Now let's look at the second method of material pricing or stock valuation. We have the last in, last out method. So the next batch is the last in, first out method. Under this method of pricing, goods are issued at the latest price in the stores. Goods are issued at the price of the latest price of materials in the stores. So if 100 units came in last, we are going to issue the materials at the rate at which those 100 units came into the store. Unlike the first in, first out method, we use the prices of the first item of materials that were received into our stores. But with the last in, first out method, we use the prices of the last items of materials that came into our stores or that was received into the stores. That is, it uses the price of the last batch of materials received into the store for all issues made until all units from the last batch have been issued, after which the previous batch is used. So with the last in, first out method, you end up getting some materials spoiled because the existing materials in the stores are kept until the last batch of materials that came into the stores are issued out. So let's look at some advantages of the last in, first out method, Lifo. It is simple and easy to operate just like the Fifo method. The charge to production for materials used is closely related to current price levels. So the amount of materials or the price we are selling materials on the market now, the Fifo uses that current price is very close, unlike the Fifo method. So the charge to production of materials used is closely related to the current price levels. And then in times of rising prices, the cost of the present high-priced materials is charged to production as it is incurred. The types of rising prices, the cost of the present high-priced materials is charged to production as it is incurred. Some advantages of Lifo. It is not acceptable for tax purposes. It is only used in US, and even that is only for financial reporting purposes, but not for tax purposes. The International Financial Reporting Standard frowns on the use of Lifo for tax purposes. So it is only used outside the country, even that it is not for tax purposes, but for accounting reporting or financial reporting purposes. The method makes cost comparison between jobs using similar materials difficult. It's difficult because we cannot compare the prices. The price that came into the stores is different from what is already in our stores. And it involves considerable amount of clerical work. When we start the calculation, you understand, just like the Fifo, it becomes a bit long and gives a lot of work to the staff to do. And it is administratively clumsy. It is administratively clumsy. We are going to base on the illustration we used for Fifo to illustrate the Lifo method. The same illustration we used for the Fifo method will be used to illustrate the Lifo method. We will start quickly. I hope you have understood the Fifo method, and it will be simple for you to get the Lifo method if only you paid attention to the Fifo method. The Lifo method, we are going to use the prices of the last batch of materials that came into the stores to issue out materials to production. So once again, let's get seated, get our calculators, our pens, and our jotters ready, and then we all do this together as we try to get an understanding of how best we can issue materials to production using the Lifo method. That is the last in, first out method. So the format is still the same thing. We have the column for the dates. We have the purchases, the issues, and then the balance column. So we have the balance column, the issues, the purchase, and then the dates. It's still September. We have the quantity, the rate, and then the amount. Quantity, rate, and amount. We have the quantity, rate, and amount. So on the 1st of September, there was an opening balance. There was an opening balance of 800 units at 40 cedis. We've done that already, so let's quickly input that on our worksheet. We have 800. As I mentioned earlier, when there is an opening balance, don't record it at the purchase column. It's already existing in our store, so we take it straight to the balance column. 800 at 40. Giving us 32,000. And that ends 1st September. The next date is on the 5th of September, and we purchased 200 units at 42 cedis. So we indicate that on the 5th, we purchased 200 units at 42, which gave us 8,400 cedis, So we indicate that at the balance side. As I said, we are now learning it, so we have to indicate what came into the stores first and add up. If we gain the understanding, all that we need to see at the balance side is the total quantity and the value at the balance side. But for now, we are now learning, so we take it step by step. We bring the 800 down to the next date because on the 5th, we still have the 800 in our stores. So we have 800 and the value is 32,000. And then we made a purchase of 200, so we add it, 200, and the value is 8,400. We have 1,000. And then 32,000 plus 8,400, giving us 40,400. Okay, so we close the 5th. So this is what took place on the 5th. At the end of 5th September, we have 1,000 units at a value of 40,400. On the 7th, which is the next date, per our question. So on the 7th of September, there was an issue of 300 units as indicated on your screens. So we need to know the issue price using the Lifo method. On the 5th, we made a purchase of 200 units indicated here, and you can still see that at the balance side. Lifo says the last item of materials that came into the stores have to be issued out first before what was already existing in our stores. We are supposed to issue out 300 units, but you can see that the last batch of materials that came into the stores is 200, meaning we cannot issue all the 300 at a go. So we first have to issue the 200 that came into our stores last before we can touch the previous batch of materials that was already in the stores. So we issue out 200. And the rate was 42. So we are using the price of that 200 quantity to issue out the materials to production. That is 42, giving us 8,400. The total units we are supposed to issue out is 300 units, but we've only issued 200, meaning we are left with 100 to issue out the total unit of 300, and that we can get from the 800 units that was already in the stores. We have to first issue the last batch of material before issuing the previous one. So once we are done issue the 200 out, it's out of our stock, so we have to touch the 800 and issue out the 300 so that we can get the total 300 units to issue out to production. So we have 100, and the 800 came at a rate of 40. So the rate for the 100 is going to be 40. So 100 by 40 will give us 4,000. We sum it up. So you can see that we have the total 300 units being issued out, and the value is 12,400. That is adding the 8,400 to the 4,000 cedis. Now our balance side, the 200 is gone, and we have taken 100 from the 800 here. So we are left with 700 units, and the value is 400 from 3,200, which is 28,000. And that is our balance for the 7th. So we close the day. At the end of day 7th, we have 700 units at the value of 28,000 in our stores. I pick the next worksheet, then we continue from there. I hope you are following through. It's very easy to prepare a cost statement using the first in, first out method, and then the last in, first out method. All right. So we still have the date here, purchase, issues, and then the balance. Quantity, rate, and amount. Quantity, rate, and amount. And then quantity, the rate, and the amount. Okay, so per our question, the next date is on the 12th of September. And on the 12th, we purchased 400 units at a rate of 44 cedis. So we have 400 units. We purchased 400 on the 12th. We purchased 400 at the rate of 44. 400 times 44, giving us 17,600. We already have 700 in our stores at a value of 28,000. And now we have purchased 400 at a rate of value of 17,600. We sum it up, we have 1,100. And we have 17,000 plus 28,000. Giving us 45,600. And that will also bring us to the end of day 12 of September. Now let's look at the next date, which was on the 15th. We issued out 400 units. So let's see how best we can issue the 400 units to production. So Lifo says issue the last batch of materials out first before the previous ones in the stores. The last batch of materials was 400, which came at a rate of 44. And we are supposed to issue out 400 units, so we can issue all the 400 at a go. So we have 400 units at 44, and the rate is 17,600. So our balance is left with still the previous one of 700 units. So we indicate that at our balance side, we have 700, and the value is 28,000 on the 15th. So we are done with the 15th. Now let's look at the last transaction which took place on the 25th. On 25th September, there was an issue of 350 units. So we have to give the issue price by using the Lifo method. The Lifo method says the last in, the first out. So we have issued the last batch of materials that came into the stores. We are still left with 700 here, which is the first batch of materials that were in the stores. So now that we are done issuing the last batch of materials, we can tag the previous ones and issue them out. We are supposed to issue 350 units, of which we can issue directly from the 700 units. So we have 350 and the 700 came at a rate of 40. So 350 multiplied by 40, giving us 14,000. So our quantity for closing is the 700 less the 350 that we have issued out. That is, we are left with 350. Then the amount is the 28,000 here. We less the 14,000 from it, which will give us 14,000. So at the end of 25th of September, we have 350 units in our stores, at the value of 14,000. So this is how to illustrate the pricing of materials using the Lifo method. That is the last in, the first out method. At the end of the illustration, we can say that our closing stock is 350 units, valued at 14,000 cedis. So you can see that using these two methods, our closing stock is at a different value. We have the same units as the closing stock, that is the 350, but the value under Lifo is 14,000, and then the value under Fifo is 15,400, as seen on your screen. So just as we said, we mentioned that the Lifo make profit high, it increases the income, or it overstates the income when we are using the Lifo method, and because of that, it is not used for tax purposes. So we are slowly coming to the end of today's lesson. Today we've been able to look at how best we can issue out materials out to production using the first in, first out method, and then the last in, first out method. In our next lessons, we will look at how best we can use the other methods, that is the weighted average method, the simple average method, the replacement method, and then the standard method to issue out materials to production. And so for your assignment or your exercise, try and look at the meaning of pricing of materials issues to production. What is meant by pricing of materials issued to production? 2, you are supposed to state with reasons the method you adapt to price materials into production. If in a period of rapidly increasing prices of the material, and then in a period of reducing rapidly prices of material. And then the third one, you are to state 2 advantages of using the Fifo method of material pricing. Until we meet again for our next lesson, I hope you enjoy today's lesson. Don't forget to do this work, and I'm sure as you do it, you find out a lot of things about material pricing, the reasons why we issue materials using either of the methods that we have stated today. So enjoy your evening as you practice what you've done today.
Subscribe to our YouTube channel, Joy Learning TV.